We've got some more banking results out to unpack. Diamond Trust Bank posting 10% year-on-year growth in Q3 earnings per share. This is lower than what we've seen from the other banks. Disappointing from your side?
Not really, probably expected. Diamond Trust was interesting, incidentally. Noticed some growth in the net interest profits. Everybody else was squeezed, but of the overall picture, we expected largely what we're seeing.
How does it compare? You say you saw some growth there in the net interest margins, whilst other banks are falling back. What's the bank doing in order to realize this growth?
Okay, perhaps you could read from probably the strategy they're taken last year, and I don't think they were too exposed in the long run. So I think I don't want to say that they had enough. They have enough liquidity right now, but last year they were not lending too much. At least not they're not taking too much risk, and I don't think they are taking long-term maturities. So perhaps they're able to take advantage of the interest rates, high interest rates right now. And the other interesting phenomenon we noted it from the numbers as opposed to everybody else's was the fact that their net interest income, their interest income grew faster than the interest expenses. So that tells us that either they have a very good source of low-cost financing, or they had seen this coming and positioned themselves accordingly.
So costs are under control, and they've got earnings, which are under control and on an upward trajectory there. Going forward, do you feel like this has put the bank in a good position in order to weather the economic environment?
Difficult to say, because at this point we also noted a weakness in their numbers, in the sense that their non-funded income actually declined. We've not done a very specific analysis to know why that is, but the fact is that they declined, and that's why their numbers were weaker than they didn't take the trend that other banks have taken, where other transaction fees and of course income from arranging loans grew, but for Diamond Trust that retarded a bit. So long run, it depends. It remains to be seen how they manage the two income streams. Perhaps even maybe cutting costs is an issue here, but we're probably going to see hard times in the number of them in the. That sector is going to face headwinds perhaps for the next maybe.
In the current operating environment, with interest rates which have risen by some 10.5% this year, which banks do you see emerging as the winners, and which ones do you feel will be the weakest banks in this tougher economic environment?
We like the transactionary banks, the likes of Equity Bank and banks with access to cheap financing. Again, Equity and KCB come to mind because of the branch networks. Interesting that Equity is
trying to make a run on the more traditional corporate loan banks like Barclays Bank, trying to tap into that space. What do you make of that move?
Well, it's prudence, seeing that you can't really the retail market or the personal loans market may not be a good idea at this point, but you want to lend somebody who's got cash flows who can pay back. So not just credit history, but also the people who will thrive best, perhaps, or the best credit, best borrowers right now are probably the corporates. And so you want to take more of those and less of the personal and the micro loans, which has been equity space for the longest time.
So a strategically good move. Let's just move on to Kenya Airways. Strong earnings coming through there for the first half, 40% rise in earnings per share. Now looking to launch a low-cost budget airline, Jumbo Jet, mid next year. Do you think this is a wise move for the airline, given that profit margins on that end of the scale are obviously a lot smaller?
Are they? Sometimes it depends on the strategy and how they profile their clientele, because it's possible for them to get good margins on that end, simply because they've got the appropriate machinery for that business. For example, when everybody else is using the big 737s over relatively short destinations, they are able to deploy the Embraers, which are relatively more efficient. So on that basis, if they can be able to price according to everybody else, then they're able to do a bit more. And again, if they can push numbers as well, then they probably could ride on scale and be able to beat the other low-cost competitors as well.
Now,
so
sorry, continue.
I think, yeah, I think the biggest challenge would probably be, as usual, cost of fuel. The operational costs have been a challenge, always have been. And if you see their numbers, their operating profits actually were lower. It's their income from the finance income section that actually allowed them to gain via hedging. Yeah. They reported hedging profits, and that boosted their net income. However, I think we're still bullish on them, seeing that they've got the right thinking strategy. Obviously, the only question is how well they're able to manage costs, or more importantly, yeah, the operating environment or the cost of oil in the world markets. Yeah, that would probably be where the challenge comes from.
Yeah, they have cited that, and of course you say they took the right hedging strategy, so they need to manage those costs going forward. Very quickly, looking at the insurance sector, I know Jubilee and Pan Africa Insurance, two of your top stock picks for the equity market, of course. The industry regulator coming out, issuing new pricing policy to help push health insurance premiums higher. This should be good for the likes of Jubilee.
Perhaps, Jubilee have been steady. They've always performed well. I think they're one of the few insurance companies that are able to benefit from from numbers. After all, insurance up to a certain point is a game of numbers. So if you're able to get a large enough network and able to access a large enough client base, then you're able to price your risks appropriately and be able to diversify them. Other issues that come up when you look at insurance is the fact that everybody expects the bad numbers from them this year, which is well and good. But the overall idea is that they underprice the stock. So that's why we see a bit of headroom coming in, and we think we're looking at it in a more medium-term perspective, and that's why it becomes very interesting.